Well, good afternoon and welcome to this New Zealand Initiative webinar. I'm Oliver Hartwich, the Executive Director at the Initiative, and it's a great pleasure to now also formally launch the report we just released this morning. It's called Owning Less to Achieve More, Refocusing Kāinga Ora by my colleague, Dr Bryce Wilkinson. I should explain a little bit about the genesis of this report. This report came about when we had a conversation a bit more than half a year ago in our office between Bryce and our former Prime Minister, Sir Bill English. And as many of you will know, Sir Bill led the independent inquiry into Kāinga Ora at the beginning of this government's term. And we talked about the inquiry and we talked about some outstanding questions really around Kāinga Ora. And Sir Bill encouraged us to have another closer look at the issue of social housing in New Zealand. Bryce took this up, wrote a report. Sir Bill then contributed the foreword, and today we've got the two together in a webinar. The report that we launched this morning is exactly the outcome of that conversation we had in, I think it was late February or early March. It's a great report. It is a very important question actually for the future of social housing and the welfare state in New Zealand more generally. And I congratulate you, Bryce, on the contribution you made. And I thank you, Bill, for both the inspiration, the foreword, and now for discussing all of the issues with us today. For those of you who've been on our webinars before, you know the drill. We'll first, of course, hear from the author of the report, and that's Bryce, and he will tell us about his findings and the recommendations. We'll then have a comment from Sir Bill about the report and some further thoughts on where to take Kāinga Ora next. And afterwards, it's discussion time, and you can all log your questions via Slido. You know how this works, slido.com, you put in a code. I will share the code with you in the webinar chat. And then what you can do is, of course, you can also vote on everybody else's questions, and I will tend to ask the most popular questions. But for now, over to you, Bryce. Congratulations on the report, and please tell us what it's all about and what you're suggesting.
Thank you very much, Oliver, and thanks everyone for their attendance. Yes, so as Oliver said, this report came out of watching what Bill's independent panel inquiry had found about the operations of Kāinga Ora, and what a big turnaround job it was. Briefly, debt had risen from about $2 billion in June 2018 to 16.5 in June 2024, and as it turned fiscal surpluses of 76 million in 2018 into an amazing 700 million pre-tax operating deficit by that year, and things were scheduled to get worse. Debt was going to pass through 20 billion in short order. Number of staff had grown from 2,000 to close to 3,500. And despite all that effort and spending and the asset purchases, the waiting list for a state house had gone up from 8,700 to 23,000. So the report does explain quite a lot what the situation was at the start of the report, and Bill's panel and what it found and the reasons behind that. And it's quite supportive. It's very supportive of the government reset plan, recognising it had an immediate problem of restoring focus to the organisation and financial stability. But the question in our minds, we've been worried about housing affordability in New Zealand for a long time, and what can be done, what is in here that is affecting housing affordability. And we discovered that there's a lot of land capable of being built on for houses, which has sort of been banked by Kāinga Ora in its operations and part of this big asset purchase and the deficit build-up. So that was a question: how quickly should that be divested? And then another question is, we've always supported the social investment approach of thinking about, if you're assisting people, how do you best assist them, not to prolong their predicaments, but to help them get back to independence. And a lot of money in the report, I estimate about $2 billion a year it's costing taxpayers to support the 198,000 occupants in Kāinga Ora housing. Could that money be better spent? And that led to the headline in the Herald article this morning of you don't have to own someone's house in order to help them. That's sort of obvious as soon as you say it. But when you apply that to the 2 billion a year going on, spending on Kāinga Ora housing occupants, yeah, is there a better way? A motivating question for that was when I got stuck into the accounts, and the last published accounts really in the annual report for 23-24, I found that although the Crown's equity in Kāinga Ora is about 30 billion and the total number of assets in the housing stock's about 44 billion, if you're a private landlord and you owned all those assets, you'd expect to be returning an operating surplus. But on my calculations from the annual report, far from that, the income was about 1.85 billion, and just the operating expenses before you deduct depreciation was about 1.8 billion. So there was hardly any surplus at all and nothing to cover depreciation, which is why that the overall accounts were in negative. So I checked that against private sector benchmarks. I found that a company, an outfit called Lodge Real Estate, had said that probably if you're a private landlord, your outgoings for maintenance and repairs should be about 50% of the rental income, which would be about 900 million a year less than what Kāinga Ora appeared to be costing. So that makes the point that when government owns something, it doesn't have the same incentive to control costs as a private person would spending their own money. And we should not regard that as something that can be easily changed. Political incentives can't be changed. Governments are there to get re-elected and to support their constituencies as best they can. So that's something which is a bit hardwired into a government ownership system. The report identifies several other inherent features to government ownership as well, one of which is there's usually a conflict between the ownership interests, and which is to get your own asset patronised, and your regulatory interests and your financial assistance interests. So that was another thing which came through the annual report, that when owning state houses brings a whole lot of subsidiary objectives to it, like climate change, what ethnic proportion of the people you're hiring. There's about a dozen of worthy things which the government provider is obliged to get into looking at, but they're not necessarily providing value for taxpayers, for ratepayers, or for tenants. So those were the driving things beyond our mind. Is once the turnaround plan, which we support, is achieved, what's to stop the whole thing from changing again next time there's a change in government which has an open checkbook? And why does the state need to continue owning 75,000 houses if what it's really trying to do is help people, and there might be better ways of helping them? So that was the focus of the questions. We're very conscious that in New Zealand, government ownership tends to be an ideological consideration, but it shouldn't be. We should be asking about what's the best way to help people. So there's a substantial proportion of the report looks at what's happening overseas. And as soon as you do that, you start getting away from ideology. You see that all sorts of countries are doing all sorts of things, and very different things. There's a big diversity. Some countries, a bit like New Zealand, nearly all their social housing is government owned. There's some, like the US, where hardly any of it's government owned. There's a trend going on for housing assistance to be more targeted at need in the OECD. And there's another trend going on, which is for less government ownership and more reliance on housing associations, community housing providers. In New Zealand, we'd be talking about iwi, possible of iwi providers or Pacific Island providers. But also you can pay subsidies to not-for-profit or charitable organisations, which are housing people with special needs, or for-profit landlords. So that's what you come to when you get to the overseas experience. There's no need for ideological hang-ups about who should own what. And Bill's forward emphasises that what tenants are after, of course, is the right house in the right location and the assistance they need beyond that. And ownership is not critical to either the house they're in or the location they're in. So that's the thrust of the report. I come to about 8 recommendations at the end. They're not strong urges on government to do something. These are contributions to public debate. It's things which we'd like to see debated more. So the first one is that asset ownership shouldn't be an ideological matter. It could well be that the state should continue to own a chunk of state houses for people with specific needs that they're not going to be able to find accommodation anywhere else for reasons of their own disability. So we're not at all promoting any idea about what the optimal state housing ownership should be. But the second point we're making is that a diverse provider ecosystem, so if the people you're trying to assist can essentially have the cash, a voucher sort of system, to be able to choose the landlord they want and the location they want, that's going to empower those people. They're going to be able to achieve better outcomes, and you're going to have a diversity of landlords competing for their business because the landlords can get the benefit of the subsidy. So empowering people is good. And the greater competition of landlords will force a degree of cost control, which you don't necessarily get with just a dominant government provider with a captive number of tenants with a waiting list. The third thing is that we think bolder action is required for fiscal sustainability and selling for the government more generally. And if Kāinga Ora were to reduce the amount of assets and the debt it held, that would free up money for government where it's sorely needed in other places where it doesn't really need to own so much, but including land. So, and that's the fourth one, is releasing underutilised land would help stimulate more building, and it's more, we need less constraints on housing building, and availability of land's been an important one of those constraints, which is why land values have got so high. So, and more house building is the best way to get rents down, increase supply. So that one's an important one. Next one is better targeting of assistance to those in greatest need. One point Bill's report made was that there are people on the waiting list who are unable to get into state housing, who are worse off, have a greater need than people who are already in there. And it's obvious as soon as you think about it, is that it's not easy for someone who owns state housing to evict a tenant because there's someone who's more needy in hand. So this sort of a mismatch between where the need is and who's getting the state houses is something which is built into the problem. It's not easily removed because of the political sensitivities and difficulties. The sixth one is well known, part of the social investment approach. A lot of these people in housing have all sorts of needs, disability needs, sort of mental illness needs, drug habit needs, sort of employability needs. They're on benefits as well as the housing assistance. It's really important that the delivery of those benefits is well coordinated to help them overall get the best value for money for them and help them get back on their feet. This is quite a perennial problem, and Bill is the person who knows most about it by far in New Zealand, and I'll leave him to follow up on that. But I just see that as really important as part of the way forward. Seventh one is let money follow the person, as it does with our school students. if your kids change from one school to another, the school roll changes and the funding the school gets changes. So the same thing would happen with tenants moving from one who are worthy of need and qualify for the criteria for assistance to take that assistance with them when they find a better landlord. And the eighth one I've already mentioned, remove the barriers to new housing development beyond just reducing the land bank which Kāinga Ora is sitting on. And the final thing I'd say is none of this is heavily critical of Kāinga Ora. The government essentially gave them an open checkbook, said, we want you to get into land development, be a leading land developer. They didn't necessarily have the skills. They were told to do the job. They got in and did the job. They could well be diligent public servants doing the same job you and I would hope we would do if they were in their situation. So this isn't aimed at the institution or the person. It's aimed at the structure of the system we've got and the incentives that that creates and the things that are hard built into it. And the whole focus is, once this turnaround is done, try and make sure it doesn't happen again and make sure that the money is really going to help those who we're trying to assist. Thank you very much, Oliver.
Well, thank you very much, Bryce. And once again, congratulations on the report. Reminder to everybody, of course, you can read Bryce's report on our website at nzinitiative.org.nz. But now it's my pleasure to hand over to Sir Bill English, because it was, as I said, it was your idea, it was your report. You commented on the report this morning, of course, on the Hosking breakfast already. And now we're really curious to hear your thoughts about Bryce's recommendations in the state of Kāinga Ora. So over to you, Bill.
Well, thank you very much, Oliver, and thanks to the New Zealand Initiative and Bryce for the independent view they've given. It's surprising, isn't it, that the largest single business in New Zealand is subject to almost no independent analytics. If it was a listed company, there'd be people out there every 6 months or some of them every quarter, second guessing what they do. And part of the review challenge was just trying to understand what went on in this large monopoly. So I'm so pleased the initiative's paid some attention to it, and I'm hoping financial services industry will start paying some attention to it, because the potential for their participation in supplying the debt and equity that's needed to overhaul the stock, whoever owns it, the potential is large. This is a large market in Australia. It's big in the UK. There's plenty of institutional capital ready to do this job on the right when the terms are reasonable, and as a byproduct, it would reduce government's gross debt, because otherwise government's going to have to finance it, as it has, the single biggest lump of debt increase in the last wee while. I'll just run through a couple of just to emphasise, I think, a few aspects of why this matters, some of which Bryce has covered. Kāinga Ora, let's just think of it as sort of as Bryce said, they were doing their last owner's bidding when they ran up debt and built more houses and so on, and got out of control. But functionally, regardless of who the owner, they are the largest and worst land banker in the country. If you want to build a new supermarket in any urban area in New Zealand, there is one owner who's got enough land for you to do it, and that's Kāinga Ora. They are the largest controller of underutilised land by a long shot. Like, there is nobody near them. So this tells you this is an institution that has wide-ranging influence, not just on the 200,000 tenants, but on every community that they're in. And if you want to see a community that's got to grips with the extent of that and how to use it, the opportunity constructively, would be Hastings District Council, where the now retired Mayor, Sandra, but Nigel Bickle, who's the chief executive, have conducted a model strategy of getting an integrated view of the housing and taking the opportunities presented. Because in every urban area, even without the government's very admirable zoning changes, this is the opportunity to increase supply inside the urban boundary on existing infrastructure. It just happens to have an owner that has no interest, well, very little interest in doing that. I think the other point I'll just make about emphasise around the problem here is, if you look at exit rates, that is the number of people who come out of a housing Kāinga Ora house, those rates just keep dropping. So we're actually getting more dependency in there, not less. The policy argument is that they're dealing with the most complex people in the country. That's not true. As part of the review, we used, this is how easy it is to know stuff these days, we used the leftover money in our travel budget to do a study in the integrated data infrastructure, pretty quick and straightforward, which showed that their tenants are no more complex than the private market, actually, which tells you they're not actually filtering that much for need. But also tells you it's an excuse. Like, lower exit rates is not really a function. It's not just a function of the tenants. It's also a function of the management of the human capital in these houses. One last reason why I should take it pretty seriously is that a house is a very expensive solution to a problem. You know, because on the one hand, a $700,000 unit in Auckland can be transformative when the job's done well. That is, when the house is built efficiently, when it's financed at risk-related structures, and when there's the type of support that enables the tenant to get on a path to independence. But if those things aren't all in place, then it's a very expensive solution to a problem which might just be untreated depression. And so part of the problem here is the purchaser, who's shelling out the $2 billion a year, and the other part of government that shells out $2 or $3 billion of accommodation supplement, doesn't understand the population they're dealing with. They do not understand their customers, other than in the sense, sort of crisis sense, that there's people coming in the door and they don't have enough supply on the day to meet that need. They do understand that, but they don't understand really what's on that register. It falls, it's just bureaucratic crack. The register falls between MSD and Kāinga Ora. So what are the solutions here? Well, this is where this report, I think, is so helpful. The cycle is going to continue until the ownership of the houses is dispersed. And actually, I think the political system is ready for this. I can recall, particularly in Dunedin, in the many election campaigns I was part of, one of the standard scare campaigns was National will sell estate houses. And it used to have, some effect, political effect. When we went round the country after, as part of the housing review, we couldn't find anyone outside of KO who was willing to argue for the status quo. Like, no one said it's absolutely vital that the government own these houses and keep operating the way they are. Everyone wanted change, and most of them fairly radical change. That is, they were communities like Hastings, or large NGOs, specialised non-government organisations that you referred to earlier, around disability, aged care and so on, and certainly iwi, all of whom were saying, how can we get into providing social housing, because we understand the tenants, we know how to deal with them on a localised basis and wrap support around them, and we're committed to seeing their independence because we don't want them stuck in our houses anyway. So I'm absolutely convinced that dispersing the ownership is vital. The government has started on that, so it's allocated all the new volume of subsidy to non-government players. But the big change will come when they start breaking up KO. Now, bits have been sliced off it. Tamaki Redevelopment Company, which runs autonomously and effectively. Tauranga is 1,500 houses there, owned by IHC, the whole Tauranga state housing stock. A couple of the councils, Wellington and Christchurch, have set up their own entities with 1,000 to 2,000 houses in them. So there's big landlords around the place, and you also want small ones for renovation. I mean, that is really critical, because Kāinga Ora, the government monopoly, has no good reason to really get to grips with the needs of the tenants, you know, to match their needs with the amenity value of the house, the need of the tenant, the support that they need, and of course then all the construction and financing that goes into that. So that's one. Dispersing ownership is absolutely vital. The second one is smarter funders. For the size of the budgets, government agencies have been bone lazy about the use of this massive asset and the care of this somewhat vulnerable population. That's starting to happen, but slowly. Gradually, Housing and Urban Development and MSD are sort of sorting out their act. They're starting to do basic customer segmentation. I don't know why it takes months. You can do it in a week, particularly with their access to data. They're starting to predict demand. Demand is quite predictable. This is not some random thing. And in the next cycle, the funder is going to benefit from all the reforms government's making to housing, so they're not going to be facing rapidly rising costs as both Kāinga Ora and the funders did through the last decade. But it's pretty important that the cabinet and the ministers demand a lot of those funders. You know, this isn't just cash in, cash out. This is a big chunk of human capital, a big chunk of physical capital, and the benefits of getting it right are large. And Bryce's report shows you the costs of getting it wrong just on the asset management. Just think of, you know, the costs of getting it wrong for tens of thousands of tenants who aren't getting the kind of support that they actually need. And the last one, which is the first time, is around the vouchers. So you disperse the ownership, get smarter funders, and I'll come back to the commercial elements of that in a minute. But no one's really talked about vouchers in this context before. And of course, there's no reason why not. I mean, you either have a bureaucratic allocation system that can certainly be done much better than it is now, or you can do what we do with another vulnerable population, which is early childhood education. And people forget what an amazing system we have here for that. You know, there's hundreds of thousands of kids in that system. It's the world's most sophisticated education voucher. That is, it adjusts by the hour according to the qualifications of the adults present in the centre. That's one remarkable feature of it. And the second one is, and it's a pure voucher system. And, you know, the last Labor government tried to shut it down, but it survived. And I think it will forever now. It's been there for 20 years. It's bundled property and services. So government hasn't put $1 of capital into early childhood for many years. And when you drive around the country, what you see is a resilient, responsive supply of the property. And that's just private capital taking its risk. Securitizing a government income stream. But they have to attract the kids. They have to attract the families, or they don't make it. And regularly there is... some are closing down, some are opening up. There's new subdivisions, there's gentrified suburbs running out of kids. You know, it's responding to the demographics constantly, all the time, with very little bureaucratic oversight. And that's how social housing should work. And I have to say, until I heard Bryce articulate it clearly, I thought, why didn't we think of that when we were doing the review? Because the most important element of it is it gives the tenants the respect and the integrity of choice. And for some of those tenants, being 2 blocks in the wrong direction makes all the difference to whether they can get to a job, whether their disabled child can get to the right school. But of course, you can't have a voucher system if you don't have responsive supply. And that's why this is I think the report does a great job of pointing to a bundle of change that needs to occur. That is funders who actually use their brains, that's getting going. Disperse ownership, but that's happening, but it needs to go a lot faster. And a choice for those who are eligible. And you can, calibrate the vouchers any way you like. That's not difficult these days. The last point I'd make is just about the financing of all this. One of the things that was invented back in 2012, I think, is a 25-year contract. When we did the review, so that's 25 years of government revenue. When we did the review, we found that in recent years, officials had never talked to anyone in the finance markets about the nature of that contract when it was designed to enable capital to come into the industry, right? So you can borrow against that contract. In the last couple of years, again, the government's done a good job. It's pushed officials to make it more credit-worthy. There's just a few aspects of it that made it difficult for banks to bank it, but that's going in the right direction. That is going to be the single most important aspect of this that has to be maintained, because it is already enabling tens, hundreds of millions of funding to come into this. And I still remember sitting in the discussions and sort of seeing officials finally realise what the hell that contract was about. Now it needs to evolve into much more complex, and more sophisticated view of the financing, and the financial markets. Anyone in the financial markets who's looking to invest in New Zealand should have a damn good look at that contract and take a view about it, and keep the pressure on government to keep it credit worthy. Because if that's in place, then all these other things can happen.
Wonderful. Thank you very much, Bill. It's always great to listen to your thoughts, and there's a reason why you're probably the speaker we hosted most often over our past 13 years, because it's really enlightening to get your thoughts. And as we get to the Q&A now, I actually have the first question to you, Bill. Hearing you, I mean, you seem to have some very radical ideas in the best sense of the word, because they're going to the root of the problem. How much of an appetite do you think there is in the government to go close to where you would like to take Kāinga Ora with your ideas? How much courage is there to do these reforms?
Look, I think they've showed considerable courage already. And the trick now is that as they're in government for a while, to try and keep up momentum and take the next steps. So the next most important step would be simply to do what's been done before, and that is signal that a chunk of Housing Corp of existing stock is going to be handed over, securitized, sold, whatever, to someone else to run. That happens it's actually it's a remarkably sophisticated market when it's allowed to operate. So, for instance, Ngāti Toa in Wellington own one of the largest KO maintenance companies. They also happen to have won through their settlement process and a bit of coercion the management of all the KO houses in their rohe, and they're also doing deals with the Pacific housing provider there over long-term land leases. Well, look, you couldn't expect any bureaucrat to do that. So the government is now starting to see the dynamism, intermediaries turning up, financial intermediaries turning up, mix of social and affordable housing by people like the Homes Foundation at a very high level of quality and sophistication. So we just got to encourage them to push further down the recommendations that Bryce has put there.
Okay, thank you. Now let's take the questions from Slido. And just a reminder, if you want to ask your own question, you can log on to slido.com. The code for this event is 2835230. It's also in the webinar chat. And the most popular question right now is, what role should Kāinga Ora and the Ministry of Housing and Urban Development play in creating pathways for people to move out of social housing, accommodation support, and into home ownership? So what pathways do you see? Maybe Bryce, you first.
I haven't studied this enough to be able to give a good answer to that. we know, the general trend that it's, as Bill was outlined, it's getting to know the person you're dealing with and their needs and being able to facilitate, get the money going into the right directions, which may mean giving them more cash in the hand, like with disability people, more ability to choose their own provider. But there are lots of different types of problems people have out there, and I'd be against one template for everyone. I think it's a matter of the service providers being far more client conscious and doing a lot more to find out what programs really work, which is the essence of the social investment approach.
Well, to me, the question sounded a bit like a reference to Margaret Thatcher's policies, of course, of selling the houses straight to the tenants.
Yeah.
Yes, well,
yes,
that's one facet.
Yeah.
Sorry.
Oh, look, I was just going to say there's actually one of the benefits of all the COVID money was that non-government entities who had dabbled in this got really involved. And there's quite a number, half a dozen models around the country that have been built to capture exactly that progression along the housing spectrum. And they just need to be let loose. You do not want, the minister's done a great job of tidying up all the bureaucratic systems into sort of one fund, because they can't handle the nuances of the risk. Like there's in the next 20 years, housing is going to be a riskier asset than the last 20, because interest rates are going to go up and down instead of dropping for years on end. So you need the intermediaries who can see how to pull these components together in a way that's relevant to their local community. And I've learned a lot from dealing with these organisations. The nuances of creating value cannot be seen really from outside and certainly can't be predicted. So the housing spectrum, yep, it's great. It's quite difficult to move people along that because the market's pretty good at finding all the opportunities. So anyone who's not in the market has got a few challenges. There's one very powerful idea though that would help, and that is as people, imagine you're in a KO house and you get a job that's a reasonably well-paying job, right? You get lucky, the economy's picking up. You want to be able to change your tenure without leaving your house. Because one of the huge disincentives is, well, I've got 2 kids at the local school, and if I went and got another, did the overtime hours on Saturday, I might find myself out of my KO house. Well, that's not, I don't want to do that. It seems such a simple idea, and I hope that we can get to it.
Indeed. We've got a question for clarification, and someone's asking, how is the voucher idea different from the accommodation supplement, Bryce?
It is similar, and I'm not on top of what the difference is. The important thing which is in my mind and behind the proposal is to give greater mobility to the people who are stuck in state housing at the moment. So it would enable the funding to be independent of the ownership. I think the difference at the moment, the big difference, now it's coming back to me, is that at the moment, if you're in the state house, the amount of rent you pay is more firmly capped than if you're not. So that constraint would have to be made more neutral as to who owns the places you're renting from.
So the voucher would be more flexible in that regard.
Yes, and it could cut either way.
Okay. Next question then. The Crown has chosen a debt-based subsidy for social housing reliant on debt. How much did the value of Kāinga Ora assets increase compared to debt? Maybe that's a question for you, Bill.
Well, look, the Crown's going to get caught in a valuation reduction. It's sort of being able to think of it at the political level, at least think of this as a just like other people, as a housing asset whose value keeps going up, it's now reached total asset value 45 billion. The valuation hasn't yet reflected the 20 to 30% drop in nominal house prices that a number of our markets have seen. And that's going to make debt look a lot less attractive than it does when you can say, well, I've got 20 billion of debt and I've got 45 billion of assets. Well, what happens when you've got 30 billion of assets and you've got negative returns and you've got 20 billion of debt? You can see a reckoning coming as the valuation drops. Of course, the long-term answer, look, this is a bit of a mindset in government, and Treasury's been guilty of this for a long time. Because government can borrow cheaply, it should debt finance these things. But of course, the reason it can borrow cheaply is because it pretends there's no risks in the asset. And the net result of that is the landlord that borrows at the risk-free rate has got the worst housing stock and the most outdated housing stock. Why is that? Because they've got no particular incentive to maintain the value of that stock, because they're getting risk-free money. What they should be doing is pricing it properly to reflect the risk of running a social house, and then you'll get that risk managed properly. So either government changes its view, which I don't think they will, about borrowing more expensively, or you get the ownership into entities who do face the full cost of capital, full cost of equity, full cost of debt, and manage appropriately. Now, it's possible that might cost the government a bit more on the revenue, on the OPEX line. It might actually have to start paying a real cost of capital on an asset that should be getting 12, 14% return, where you've got really challenging tenants. So I think that's gradually going to unfold as other providers come in the market with properly priced capital.
Great. The next question is about something that you already mentioned, Bill, in your remarks earlier. Critics claim private landlords would never take on some state housing tenants, even with generous vouchers. How would you assess that argument? I believe you said it's actually a tiny proportion of all Kāinga Ora tenants that would actually be such a problem group. Do you have numbers on that?
Oh, look, I can't give you the numbers off the top of my head, but if you think of the 80-20 rule, the 20% of the 80% of the tenants are just fine. They're good people, good tenants. 20% are challenging, and in that 20%, there's 20% of them who take most of the time. When we get around, but you just keep in mind that there's a lot of housing provided outside the social housing world, particularly in the areas of, say, mental health and disability, who are subsidised in different systems. So there's any number of operators who are experienced in managing challenging tenants. And in fact, on our tour around, we went to one large new housing corp facility where they had contracted in outside sort of tenancy management. And then they decided that they needed to be there as well. So you had two tenancy managers system in the building, two tenancy managing companies. And it was very tense, not because of the tenants, because of the bureaucratic competition over who was managing. But look, there's nothing special. In fact, I would say KO's more recent tenancy management, much as they've got some experienced people who are very good at the judgment, their system is worse than almost everyone else's. Expensive, top heavy, not that flexible. Now, the current management's improving that, but this general idea that they've got some sort of special magic and people out in the market haven't is simply wrong. There's no problem with the supply of those skills, just like there's no problem with the supply of equity or debt, and no problem with the supply of efficient construction systems who can all do the job at least as well and probably better.
Okay.
I can add a bit to that, Oliver.
Yes, please.
I say Kāinga Ora has been very helpful and prompt, admirably so, in responding to a draft of my report. And on this question, they indicated to me that the number of tenants who causing them real grief, and either in terms of rent arrears or smashing up properties, came down when I converted their percentages to numbers to about 700 of those 75,000 properties. So under 1,000 scattered across New Zealand are the ones who really serious difficulties.
Next question then from Slido. Why recommend more demand-side methods when we see overseas more success in housing outcomes when supply-side methods are used to constrain house price growth? I believe I can guess the answer. It's not an either or, is it?
No. What was the question again?
The question is actually, do we need demand-side measures like subsidizing housing when we could rather actually focus on the supply side of the market and just make housing more generally more affordable?
Yes, I think that's right. Supply side is the crucial thing, and then helping people with special needs who can't cope without the help and need help to get back on their feet. And that should be applied really regardless of who owns the house they're in.
Yeah, look,
I think I saw you agree.
Yeah, it's a critical point, and actually I think we're going to start seeing the benefits. If you think of what's happened since about 2009-10, you've had this upward pressure on housing values, building costs, etc. And that is, I think the government deserves a lot of credit actually for working through the swamp of boring detail about, what building products you can import without, because they're already certified, through to what would by any historical standard be regarded as radical zoning decisions. Now, they're not all perfect, but there's at least the large political parties are behind it. So I think there's a kind of sort of semi-bipartisan support. No one's promising to unwind it. It's got broad reach in the community because you've got younger people now starting to see housing might be affordable for them. And the government has every interest in it because it will reduce its fiscal exposure to the property market, because it's got two exposures to the property market. One is the OPEX and the subsidies. That's $4 billion a year. $4 billion a year. It's just purely driven by the cost of housing. And then it's got this large asset exposure, which, as I said, is going to have because the values have to come down, it's going to have a significant impact on New Zealand government net worth, just that one item. So they have the zoning thing works politically, it works for the economy, and it works for the government's books. And if they could combine that with freeing up the latent value in all this underutilised and land banked land in every single urban community, well, you've got a mix for quite a significant positive impact on the economy, and more importantly on households' ability to service their housing costs.
Next one then. What do you think about the finding that New Zealand is an outlier in the OECD in that public housing has a better indoor environment than private rentals? Is that true? Bryce, maybe.
No, I haven't seen that statement. I can't comment on it.
Look, I think you'll find that whatever the averages in public policy, the average is the enemy of the truth, right? Never use the average. So what you'll find in the KO stock is some of it's very good internal environment and some of it is pretty awful. And in fact, there's a big chunk of stock that's going to age out over the next 10 to 15 years. It's something like 40%. Like that has to be financed. There's no choice. It has to be financed because those houses won't comply with health regulations and so on. The private market, it's pretty rough. I've been out there looking actually more recently because we're doing a house renovation. And it's, there's a wee way to go for it to get really attractive certainly to get as attractive as the new KO stock.
Yeah, I can add one point on it now, I think, and that is that regardless of the averages, we should be able to do better. And is partly reflecting on Bill's point that the averages don't tell you anything. But one of the alarming statistics was that despite serious complaints of running into hundreds a month in 2022, 23. Only 3 troublesome tenants were evicted. So you've got people living in stating housing areas where they're feeling intimidated and harassed, and nothing much has been done about it. So we might be better than the world average in that respect, but we've got to be saying it's not good enough and we can do better.
The next question has very little to do with Kāinga Ora, but it's the most popular question, so I'm going to ask it anyway. Sir Bill, is it true you favored including a more comprehensive capital gains tax in 2011 reforms, but couldn't convince your colleagues? If so, why? Is it true?
Oh, it was certainly seriously considered. I think every finance minister has a look at it, and they seem to come up with the same answer. In fact, Michael Cullen told me that at the time. He said, "Oh, you'll go through all that, and then IRD will tell you that it's actually not that worth it." So no, there was no constituency for it in the cabinet, that's for sure. I now think capital gains tax is not quite irrelevant, but it would be a complexity that doesn't collect much revenue, because capital gains in the days of guaranteed capital gains in the housing market are over. Now you're going to have to be, as an investor, much smarter at picking value, the right location, the right quality of housing, the right part of the market. You know, I came across a house the other day in this rental search where the owner was quite specific. They said, this is the first home buyer market is busy, it's turning over, prices are flat, but sales are happening. The top end, a bit's happening because there's a few cashed up buyers who aren't going into retirement villages. But this mid-market, which in this case was somewhere between 1 million to sort of 1.5 million, just said nothing's happening. And they were scratching their head saying, okay, so what's actually going to happen with this? Is it automatically going to go up in value? To which I said, well, I don't think so. You might have to rent it out. And that's one reason rents are going down in some of our urban areas now.
Yep. It should not be an issue, but I'm sure it will be, because next year is an election year again. So we'll probably hear a lot more about that over the next 12 months. Anyway, back to Kāinga Ora. Next question is, while Kāinga Ora has challenges, it provides government levers to influence social outcomes and mitigate risks that would not be possible in the private market. Is the trade-off between the two right? Bryce?
No, we've got no reason to think it's right, and that's why this point, this paper of mine raises the question: why are we owning we're owning 75 to 78,000 houses when we don't know that we've got a good public policy reason for doing that? It's sort of a historic accident which has evolved. We've got good reasons why governments don't have the good incentives to be landlords. They've got very mixed incentives, political incentives. Competing landlords would have an incentive to keep costs down and to supply houses in locations where people actually want to live, and the type of house. So as house sizes change because of changing fertility, the market demand for housing sizes, and it's going to be more resilient and more responsive if there are lots of people chasing for the right sort of tenants for the house they think they're going to be able to supply. So that's the question. That's the question we're raising. I'm not pretending to know enough about the industry to be saying what the answers should be, but I'm saying it's a jolly important question. There's so much money at stake. There's so much human capital at stake in all that 198,000 occupants.
Yeah, I'd agree with the questioner that the government has that role. What it needs to do is get much smarter about the role that only government can do, and that is collect the tax to create the funding stream, and then intelligently use that funding stream to realise the potential for human capital. No one else can do that the same way government can. All the other stuff is incidental. Who builds the house? You know, whose name's on the title? who the property manager is. There's way more effort goes into, this is what gets me motivated about this issue. Way more effort goes into that than into the 200,000 people, right? For whom the house is part of their life, but it's not their whole life, and for whom many of them have potential that goes unrealised because we create a system that traps them there and a system that excludes others who are in desperate need.
Indeed. Next question is about an aspect we haven't talked about yet, and it's the tenancy tribunal. Someone here asks, private landlords can help house more risky tenants. They just need sound policy and the tenancy tribunal to help protect them. And the tenancy tribunal is far too slow. Any thoughts on that, Bryce?
It sounds believable, yeah, but I haven't looked at it, so I don't have a solution to offer. But yes, you can see the regulation of private landlords can be problematic. It can make them risk averse and very reluctant to take on a tenant who might cause trouble, which gets the landlord into trouble.
Do you know more on the tenancy tribunal, Bill?
Well, look, these regulatory details really matter. I think government could take a lead by putting out into the, instead of saying, we're going to build you, you're in the queue, you've got a need, we're going to build you a house. They could just put some different sorts of rental contracts out in the market that, for instance, underwrite that property damage, or have a component where a private landlord can actually contract a support service, or longer tenor to say, look, here is a 5-year contract and the government will underwrite that. That would be much cheaper for government than building another house. And it would show a lead to the private market about it would reveal the preferences for what I think would be wider range of preferences for rental contracts, which at the moment tend to be fairly short term and don't always work for tenants who need more security.
The next question is for Bryce. What can New Zealand learn from countries that run social housing without owning most of it themselves?
Oh, that it's perfectly feasible. It can be done, and it can work. So what? Yeah, that's and that's the lesson. So we don't have to think about this in ideological ways. What Europe is showing is there's a vast range of different approaches in different countries. So we don't have to rule out a world in which the New Zealand, actually, social housing is not very high. It's 3.8% of the social stock. What stands out for New Zealand is the proportion of it which is centrally government owned. The survey of the rest of the world shows it doesn't have to be like that. That's a choice we can make, and it's a choice we should discuss sort of in a public policy framework of what's going to be best for the people we're trying to help.
Well, that's a general malaise of New Zealand policy, that everything in New Zealand is very centralized compared to the rest of the world.
Yes, that's right. And the greater localism is a message we've all been pushing for best part of a decade now.
Indeed.
Well, but moving Kāinga Ora into various types of community or private ownership is the biggest single step we can take for localism. And that's why it's great the initiative's done this report.
Great. Final question for Bill. Why is it so hard for any government to step back from owning housing even when it's not working well?
Well, I think the good news is it's getting easier. I mean, it's been hard because the State House has been a sacred cow in New Zealand politics. We all know the history of state dominance of just about everything in New Zealand. And a lot of our progress has been about appropriately pushing back that dominant influence so the state does the things it does well. And in this case, funding of it is the thing that government can do. But I think the current government would be pushing on an open door for the first time in my lifetime if it said, right, we are now going to localise KO. We're not going to run a large government monopoly. We're going to have diverse and dispersed ownership and allow all the people who are full of goodwill and innovation and capital to get at this long-running problem. But it is impressive, isn't it, how long we are willing to stick with things that obviously don't work. It's a bit like, literacy in schools. Our belief in the inherent goodness of state provision is so deep that we're willing to tolerate persistent failure for, several generations. But in the end, we get there, and I think on housing, we're getting there.
And on that optimistic note, because I don't think it's getting any more optimistic, I think we'll conclude our conversation here. I thank both of you for the spirited discussion. I thank the 140 people who were on the call with us and watched our discussion here. And I encourage all of you to now, of course, read Bryce's report. As I said, it's on our website at nzinitiative.org.nz. But for now, thank you very much, Bryce. Thank you, Bill. Thank you again, Bill, for the inspiration behind this report. And we hope to see you again next time. But for now, thank you and goodbye.